Hi, this is James Trugg with Westpac London's end of week report for March the 15th, Friday, March the 15th. Look, there was a pretty decent positive sentiment on equity markets yesterday following positive US economic data. That sentiment's turned a little bit sour today for a range of reasons. We did have quite a bit of US data today, which was part of the story. Inflation rose 0.7%, that's the CPI in February. That's the biggest increase in 3 or 4 years. It was lifted by energy. Gasoline prices up 9.1% in February. Food prices were just up 0.1%, and the core rate was constrained at 0.2%. That wasn't a particular market mover. Industrial production figures were decent, with a 0.7% rise in February. That included a 0.8% rise in factory output. Autos and machinery up particularly strongly. The New York Fed's factory index for March it edged down from 10 to 9, but they were still the strongest back-to-back readings since the first half of last year. There could be, in fact, a bit of a seasonal adjustment distortion driving that index, and indeed a lot of the other US data, where you get strength in the early part of the year and then softness around the middle of the year. The detail there showed orders, shipments and jobs all still growing, but at quite a bit of a slower pace in March compared to February. But the surprise for the markets was the fall in consumer sentiment on the University of Michigan index. Fell from 77.6 to 71.8 in the preliminary March reading. Shouldn't really have been a surprise. We already had the IBD TIPP Economic Optimism Index for March. That showed quite a significant fall as well. In fact, I prefer to look at that index. It covers or surveys, I think, 900 Americans, compared to this preliminary read on the Michigan index, which only covers 300 people. But nevertheless, the markets were surprised, and that contributed to the losses on Wall Street today. The numbers I'll go through in a minute. Bit of other data out. I'll mention the European core inflation rate, steady at 1.3% in February. That's the lowest pace that we've seen on that series since the middle of last year, and middle of 2011. The other development was that EU leaders in their summit, they've shifted the focus in their language to talking about structural deficits. Now, that's significant because effectively they're saying that they're going to allow member states to run larger deficits for longer, with a view to what the deficit would be over the course of the economic cycle. So not just to focus on the euro value of the deficit, but taking into account the underlying economic conditions that might be driving that deficit. This is effectively a diminished insistence on austerity, and it could even mean that somewhere down the track you'll see less resistance to fiscal transfers between Eurozone countries, something which we think is necessary if the euro is to survive longer term. However, markets didn't particularly like that either. One other development, we've seen stress testing of US banks, and let's see, so JP Morgan and Goldman Sachs, their share prices were down today because they were asked to submit new capital plans to the regulators. On the other hand, Bank of America up about 3%, Morgan Stanley higher as well. They effectively received a tick of approval from the following those stress tests. So, in terms of market movements, as I said, biased towards the downside today. We've got in Europe about an hour ahead of the close, the London market down 0.7%, French market down the same amount, the German market down 0.5%. We've got a loss of 1% in Spain, and Italy is down 0.6%. And the Dow at the moment off 0.25%. That's at 14,504. Now remember, we were talking about multi-year highs earlier in the week, so these are modest corrections, but nevertheless the positive momentum from earlier in the week hasn't been able to continue, given the EU leaders, given the surprise on consumer sentiment and some of that banking news. On the commodity markets today, We've got copper prices down 0.4%, gold's up 0.3% at $1,595 an ounce, and oil's up 0.5% at $93.47 a barrel. The Aussie dollar, it's not too much changed at about 1.038 against the US dollar. Now look, it's been strengthening this week, it's just more or less steady today. That's about it really. That's it for this week. I'll be back again next week, hopefully around every day next week with more reports on what's happening this side of the world. Okay, but bye for now.